Hello everyone, and welcome back to our channel. Today, we're diving deep into a topic that's been on the minds of many investors and currency enthusiasts, the Iraqi dinar. Specifically, we'll be discussing the thoughts shared by Intel Newshound guru Mint Goat regarding the reinstatement of the Iraqi dinar and why it hasn't already occurred. To begin with, let's set the stage by understanding the context. Prior to 1990, the Iraqi dinar was valued at approximately $3.22 US cents. This strong exchange rate was reflective of Iraq's substantial oil reserves and robust economic standing at the time. However, following the Gulf War in the early 1990s and subsequent economic sanctions, the value of the dinar plummeted, and it has remained artificially suppressed ever since. The war ended 21 years ago, and Iraq has made significant strides in rebuilding its economy and infrastructure. One might naturally ask why the dinar hasn't regained its former value, especially considering Iraq's improved economic indicators. According to Mint Goat, several compelling factors suggest that the dinar should be worth much more than its current value, which is a mere fraction of a penny. Firstly, let's talk about oil production. Iraq is now producing 1/3 more oil than it did in 1990. Oil is the lifeblood of Iraq's economy, and increased production directly correlates to higher national revenues. This surge in oil production should ideally boost the value of the dinar, as it signifies a stronger and more robust economy. Secondly, Iraq's monetary reserves have reached unprecedented levels. The country now holds up to 150 tons of gold, alongside other marketable assets. These reserves are a critical measure of a nation's economic health and stability. High reserves typically mean that a country can back its currency with tangible assets, thereby instilling greater confidence among investors and international markets. Furthermore, all Chapter 7 sanctions, which severely restricted Iraq's economic activities, were lifted over a year and a half ago. These sanctions had a profound impact on the country's financial and economic freedom. With these restrictions now removed, Iraq has greater latitude to engage in international trade and financial transactions, further strengthening its economic position. Despite these positive developments, the dinar's value remains artificially low. One theory is that this suppression is a strategic move by certain entities to benefit from the eventual revaluation. By keeping the dinar's value low, these entities can acquire large quantities at a minimal cost, potentially reaping substantial profits when the dinar's value eventually increases. However, the ongoing suppression raises important questions. If Iraq's economic fundamentals are strong, and the nation is performing well on key indicators such as oil production and monetary reserves, why hasn't the dinar been reinstated to reflect these realities? Could it be that the current exchange rate is an outdated artifact of past conflicts and sanctions, rather than an accurate representation of Iraq's current economic strength? In conclusion, the case for reinstating the Iraqi dinar at a higher value is compelling. The war has been over for more than 2 decades, sanctions have been lifted, oil production has surged, and monetary reserves are at historic highs. All these factors suggest that the dinar should be worth much more than it currently is. Yet, the rate remains artificially low, leading many to speculate about the underlying reasons for this suppression. As we continue to monitor the situation, it will be interesting to see how these dynamics evolve and whether the dinar will eventually be reinstated to a value that truly reflects Iraq's economic potential. Thank you for watching, and don't forget to like, share, and subscribe for more insights on global currencies and economic developments.